massive dollar selling, and it remains extremely vulnerable given the current macro narratives. Guys, we're heading towards a significant area for the dollar index. Let's take a look at all of the key talking points on a fundamental and a technical level. Let's jump straight into this. Hope we are all well and truly lit. Yes, we are back with another week in these beautiful markets. Guys, you think one week we're going to have a potential slowdown in volatility, but it's just not stopped, has it? We've seen banger after banger after banger in terms of these trading weeks. Have been a lot of volatility. Markets have been very much one directional. Just when you think, oh, potentially we're at a bit of a bottom here for the dollar, we're at a top here for some of the dollar pairs, but hit with another wave of downside momentum for the greenback. And obviously the dollar's peers are flying right now. Now, look here. Obviously, these are big weeks of selling, and this is significant. We went over all of this, but again, let's once again refresh our memory. Okay, this is why we continue to go over this. You know my style. We want to ingrain it in our heads, so we just have our finger on the pulse all the time. That's it. We understand these macros. 2024 upside pressure, 3 key pillars supporting dollar to the north, which we were calling. 1, inflation remains sticky in the United States. If inflation remains sticky, means what? Takes on to our second point. Higher for longer in terms of interest rates. Got to keep rates higher if inflation remains sticky. The only way we bring down inflation is by keeping borrowing costs higher. So, we're trying to discourage, the central banks are trying to discourage from people going out spending, and continue to stimulate prices of, these goods and services. Businesses are not going to put down their prices, right, if people are still out spending. So the way we counter that, keep borrowing costs high, and then people are less likely to want to go out and spend money and continue to stimulate. Point 3, economic data in the United States in 2024, the start of 2024, just continue to beat expectations, PMIs, GDP, labor market, all of these big data points were supporting the greenback. And when you look at other major economies, in 2024, early 2024, remember we were talking about signs of recession. And the Eurozone was slowing down, the UK was slowing down, New Zealand, Canada, all these other major economies were slowing down, but United States was just bullish. So those 3 key pillars were supporting the greenback north. We knew this. And then now, come late June, early July, finger on the pulse, we started seeing inflation cooling, didn't we? We started seeing, remember before, Jerome Powell, that speech, remember that he was testifying to the Senate. He was testifying and he was just noting out our substantial progress that we made on inflation. You see, back then, he was getting the markets ready for these rate cuts in September. So those 2 things. Guys, you see all this information that I'm putting into this video, it just comes like that, right? It's second nature to me. And the reason being is because obviously I have that experience. Nothing beats experience in these markets. Everything that I have learned, I've been able to simplify, because a lot of information that's out there in the public domain is extremely overcomplicated and a lot of jargon, and it doesn't make it easy for the everyday person, everyday trader trying to learn macros, understand, why is the price just spiked here because of this fundamental reason? I don't understand it. Because all this information's over, complicated. But for me, all these years, I've been able to simplify it, make it easy and digestible and actionable for the everyday trader. And that's exactly what I've been able to do. And I've put together in my fundamental bootcamp course, which you can obviously check out if you're willing and keen to really level up your whole game. You can thank me later on that. Anyway, let's continue with the video. Inflation coming down, dovish central bank chief. 3, economic data. Look what we've seen in these latest data points. Labor markets worsening, less jobs being added to the economy, higher unemployment claims, higher unemployment rate, wages coming down. So data, just key economic data points are softening. And as we said before, the dollar's lost its edge, and it's still to this day remains vulnerable, subject to some more selling pressure. Okay, why? Well, you saw Jerome Powell, right, on Friday. And the main thing that he said was, now is the time for rate cuts. You can't get any more dovish than that, can you? Now is the time to change policy. That language was very strong and firmly communicated that we've got several cuts. I was even surprised. Whoa, it's like, now's the time for change, significant game changer. And has left the dollar vulnerable to some more selling pressure here. Okay, guys. So, this is significant because we've pared back that move, more or less. Look here. we're sort of at those where we commenced that upside trend, that reversal candlestick there. And when you look at the dollar index now, the next major zone, as you can see, just above my head, my bald head, is this 100 towards 99.80 area. Okay. Now, with that being said, let's just take a look at what's going on this week for the dollar. Okay. I mean, that's enough of a narrative, and that's enough of you know, a reason to just keep selling dollar. But let me say one thing before we go into these data points. The dollar is oversold. Okay, the dollar is oversold. We cannot forget. There's a couple of things that we cannot forget, guys. And I really, really want you to stay with me on this. The dollar's the reserve currency of the world. The 99% of the global economy on a business level are still doing freaking business in dollars. Okay. The FOMC are only just about to cut rates in September. The Bank of Canada, the Bank of England, the Bank of the European Central Bank, the SNB, all these other central banks have been freaking cutting, man. The FOMC are only just about to cut. So at some point, obviously this narrative has just been so dominant. Markets really wanted the FOMC to catch up and start cutting rates. But we can't forget that other major central banks are moving faster, and they still will move faster than the FOMC. Okay, so at some point, we're going to need to get a correction on a technical level and just make sense on a macro level anyway. So this is a big area again, approaching another big area here. These lows, are they the lows of 2023? It looks like it. They very much are. The lows of 2023 is the next significant area and a potential range or region for the dollar index to bounce. Now, this week, a couple of key data points to keep an eye on. Obviously, we're going to want to keep an eye on consumer confidence. We want to understand how confident is a consumer, because if the consumer's not confident, the consumer are not confident. If they're not confident, they're not going to be happy going out spending their money. They're going to be tightening up their belts, yeah. So we'll keep an eye on that. But really, the key data points come later in the week on Thursday. GDP, prelim GDP expected to remain unchanged at 2.8%. We'll keep an eye on that. The price index is also important. Okay, because if we're seeing disinflation, prices of those, the figures that make up the GDP, if they're coming down again, that's just going to weigh on the dollar. And then with the core PCE, the Fed's preferred measurement of inflation. Now, what we could do and what would tie in nicely, and people need to always remember, I always stress it. Fucking hell. Sorry, guys. I had to drop the egg up. It gets on the skin because sometimes I still get messages from people saying, stupid shit, dumb shit, where they're like, technicals. That's it. It's just technicals. No one cares about macros. God, that really, really, it gets under my skin. Anyway, just bringing it back to the point here, where fundamentals could go nice in hand this week with technicals is this big area here. So naturally, just given the tone Jerome Powell left the markets with on Friday, we are probably going to still see some selling over once we open on Sunday, Monday, Tuesday, maybe Wednesday. But that could take us down to this zone here. Now, what will go in nice and hand is potentially we surprise to the upside with some of these data points. Maybe the economy is not slowing down as fast as the markets are, or been worrying about in the United States. Maybe we get a surprise to the upside on the GDP reading. That would trigger that dollar correction, big correction, because that's one of the three pillars that we're looking at. Remember, inflation, FOMC stance, and data. And obviously GDP before obviously inflation. When inflation's not in focus, GDP is king. Okay, especially in certain times like now where we're seeing a change in economic cycles. You know how we had this boom, great growth, and now we're seeing slowdowns in growth. GDP is in the focus when in those sort of cycles when we're sort of transitioning, and now we're in a new transition of a cycle where we're getting slowdowns. Back to the point. So on Thursday, maybe that's a reason for us to bounce for the dollar index, and obviously maybe that's reinforced come Friday with core PCE are expected to remain unchanged at 0.2%. So that's the Fed's preferred measure of inflation. So, definitely another key week for the dollar here, and maybe that's the scenario that plays out this week. Early selling, potentially bounce when we get here, supported by the macros, but let's see. So once again, guys, I hope you found value in today's video. As I always say, I'm just scratching the surface on the level of knowledge and value that we are putting out on a daily basis via the TFTC premium community. We've always got our finger on the pulse with the key macroeconomic data points, with the narratives, with the themes that are driving the assets, that are influencing the direction of what we are trading, okay? And the thing is, it doesn't matter how you trade technically, whether you're an ICT trader or a SMC or whatever, it doesn't matter. But those macros, knowing those macros can really give you that extra edge. And as I always say as well, if you do really want to take your things to the next level, there isn't a fundamental bootcamp course out there like mine, which can really help you level up your whole game. So if you want to, you can check it out. Otherwise, keep finding value in these videos. Do me a favor, right? You see I disappeared just for a little while. Smash up that subscribe button, smash up that like button, and leave me a comment of how you're finding value in these videos. Other than that, stay lit, stay blessed. Let's get it.